There's one hidden trading key that most traders never figure out, and yet it's one of the biggest difference makers to your bottom line. In this video, our head of trader development dissects this hidden trading key in detail. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City since 2005, and proud to have developed numerous 7 and even 8-figure per year traders. Watch, take notes, and learn from SMB's head of trader development so you can grow your trading account.
Many traders struggle with holding their winners. Today, I'll show you how a subtle shift in strategy can unlock real trading success. And we're going to use a new tool that I've developed to prove it. So I recently worked with a trader who was doing everything right. His entries were solid and his analysis was sound, but he was still struggling to hold on to his winners. Instead of focusing on trading psychology or his psychology, we focused on improving his edge and helped him realize just how powerful his strategy really was. We teamed up with another trader on our desk who had already overcome the same challenges and found real success by mastering what we're covering today. Today, I'm excited to introduce you to a game-changing tool, the Expected Value Calculator. So this free, powerful tool is designed to help traders find and maximize their edge. I'll show you exactly how it works through real trade examples, and we'll share the process used by our traders to kind of flip the switch in their own minds and really hold on to their winners. We're going to dive deep into 3, maybe even 4 trades today that offer real edge, breaking down exactly why they work. And then we'll use the EV tool to calculate the risk to reward and the probabilities, simplifying everything so you can replicate this process on your own. Finally, we're going to cover some ways traders have really helped themselves by using this tool to understand and enhance their edges just so they can be more consistent, to improve their trading results, and then solve that really frustrating problem of how do you hold on to your winners to capture more of the happiness that trading can offer. Let's jump right into this tool. So what we're looking at is the SMB Expected Value Calculator, EV Calculator. You can get access to it. It's free. You just click the link that's either on the screen or down below in the description. Follow that link, throw in your email address. You'll have access to this tool so you can play around with it. I'd encourage you to do that right now so that you can follow along with us as we're playing through it. Let's walk through the basics of this tool and how we get into this and why we created it. Risk to reward, those are 2 of the 3 variables that we input on there. Stop thinking in terms of dollars and start thinking in terms of risk and reward, particularly in terms of R's. So we're going to start with our stop on every single trade we cover. That's one of the paramount things to trading successfully on our desk. Start with your stop. Then we're going to define an entry. And then based on the input variables of everything we have, we're going to calculate our target. That gives us our risk to reward. We're not thinking in terms of dollar amounts. That's a different discussion. We're thinking about terms in risk and reward. So if I'm risking $1 to make $3, that's a 3-to-1. If I'm risking 50 cents to make $4, that's an 8-to-1. We're going to put everything using this tool in terms of R's. That's going to simplify it across the board. I know it requires a little bit of math, but you can do it. Just stick with us. If you put things in simple R terms, that's going to be the first step towards helping you just hold your winners longer. Stop thinking in dollars, start thinking in R's. Second thing, probabilities. Okay, so probabilities is where a lot of people get hung up. It's like, well, I don't know. Is it a 50-50? Is it a 60-40? Is it a 70-30? Just simplify it. We're going to make it really simple, and we're going to assume a default for trades that have edge of a 60-40. This entire idea came up. The entire idea for an EV calculator came up from the book, The Science of Hitting by Ted Williams. So we were sitting around talking about EV, and we were talking about ranking the EV for different trades, and we were kind of doing a little experiment. We were talking with a bunch of traders and trying to actually calculate what their EV was in their profitable trades. What we found was there was this actual area, this zone, if you mapped out all the EV, which is what you see on the right in this calculator, if you map out all the EV, most of our good trades occurred in this area that we'll call the happy zone. That's from that Ted Williams book. He calls it a happy zone for hitting, right? We're going to call it a happy zone for trading. So you'll see that dark line that is the real happy zone. And then that dotted line outside of it is the acceptable zone, right? Just think about it as most of our good trades are going to fall in this zone. So by using this tool, we'll actually put math behind our trading decisions to see, am I trading in that happy zone? Am I trading with good EV? Or really, am I just making random trades that don't need to be a part of my trading anymore? If you can eliminate some of those trades that you really shouldn't do, you can open yourself up so much more to just focusing on, I have edge here, and I can really work to hold the trades that work for me. I can hold my winners longer. What we're going to cover in these, the 3 trades we're going to cover, maybe even 4, are the scalps that we start our traders with, and we take every single day on the desk. So the reason why we're going to start with scalps is because they give us more opportunity to trade in the happy zone. It allows us to understand the probabilities and the risk reward more discreetly. By trading more in the happy zone, which is why we have our developing traders learn to trade and scalp first, it's so they can build momentum and stay in that happy zone of trading, that really dark outline box. And even more, if they're not in the happy zone, they're at least in that acceptable zone. Let's get into 3 quick trades. The first trade we're looking at is a fashionably late trade. This is a trade that we teach on the desk. It's a trade a lot of our traders will make. Very straightforward trade. We're going to play it forward and we're going to watch as this trade unfolds. Now, the entry for the fashionably late doesn't occur until the 9 EMA crosses VWAP. The 9 EMA is the blue line, purple line's VWAP. We're going to start with our stop though. Our stop is always, we take the low of the day to that VWAP cross and a third of that distance. So we take that measured move all the way from the low of the day to the VWAP cross, and we take a third of that as our stop. So our entry would be the 9 EMA crossing VWAP. We're looking for that right now. We're actively thinking about that right now, and we'd risk a third of that distance. As soon as we get an entry, we'll talk about it. Let's talk about the target. The target is that one measured move component. So let's hop over to the EV calculator and let's put this in. At its baseline, we know this trade, as long as all the checks are in our favor appropriately for this trade, which we have in this case, we have a 60% probability of it being a winning trade. Again, baseline probability. We're risking 1 to make 3. So 3 to 1. Let's very quickly calculate our EV for this trade. The expected value is 1.4. That's right on the edge of that strike zone. That's right on the edge of that happy zone. Is it the best trade we could ever take? Well, no. But is it an acceptable trade? Just enough, right? So let's go back and let's cover the trade. Using this EV calculator, we can very quickly identify how much emphasis should we be putting on this trade. Well, probably just the right amount. We shouldn't be overvaluing it. We shouldn't be undervaluing it. This is just a solid B trade. By calculating that, we've already set ourselves in the mindset of, okay, this is just a really good trade for me to take. I'm not going to overemphasize it. I'm not going to oversize it. I'm not going to spend too much emotional energy on it. I'm just going to take this trade because this should be a solid base hit trade. If we change our entry, if we predict this trade, if we guess that this trade is going to occur before it actually occurs, if we make adjustments to that trade, guess what? We're giving up our edge and we're taking a trade that is kind of a good baseline trade that most of us would make every single day, and we're giving away our edge. We're changing the risk to reward, or we're lowering the probabilities. So all of a sudden that baseline trade could get kind of against us pretty quick. Let's watch this trade as it continues to develop. As you see this cross is about to occur, what's really interesting about this is we're taking a third of the move from the low to the cross. Well, there's a little check in our favor here, and about a third of that move would put our stop somewhere right down in here. Well, we just saw it dip down and then get rebid there, so we saw the buyers there. So we have a little check in our favor where we're not just blindly saying a third, we're actually lining that up with where the buyers were present. If we get that cross, we can enter the trade. You notice how we almost got that cross, and then we had that dropout. Now we get an extra check in our favor. We actually get to see, are the buyers still there? And if the buyers are still there, that's going to improve the probability of this trade working out. Maybe it's gone from a 60-40 to a 65-35. Well, let's take a look at what that does to the EV on this trade. We come back into this, and now we have a 65% probability of this trade working. Again, we haven't changed anything with the risk to reward. It's still a 3-to-1. We're still risking a third of the range below VWAP, and then we're looking for that entire measured move to the upside. Well, all of a sudden, our EV has expanded in this trade. The trade's a better trade to take than it was when we just had that baseline. Let's take a look at the trade and see how it plays out. We have those two tests right there. And now if we actually get the trade, what's the likelihood of this trade working out? Well, it's improved. Our probabilities have gone up slightly. The trade has triggered, and it triggered right here. And our stop is right below the low of these. That's a third of that distance, roughly. So now we get to think about the EV as it's expanding or contracting. So we're starting to see the consolidation above VWAP. That's a very good check in our favor. We'd want to see a little bit of a pause and then the momentum continuing. We're thinking about our target, which, I know it's a 3-to-1, but it's just above the previous high of day. This is a pretty straightforward trade. As this trade plays out, we can be thinking about how nice of a job are the buyers doing. We've recognized that because of this very clean thing that lined up and we saw the buyers there, our EV expanded a little bit. Right now, it's that moment in the trade where so many people are thinking, oh, I just don't want the trade to go against me. But again, if you've done your EV calculation, you know this is just a decent baseline trade. Should you really worry about it so much that you're like stressed out about it? Should you be moving your stop to like some random price? No, just take the trade. You know where your target is. You know where your stop is. You had your very clear entry. We know it has positive EV. You can just hold the trade to target. It takes a lot of the pressure off yourself when you know that you're trading in that appropriate zone. Remember before when we said the baseline was 60-40? Well, it was. But then we were able to increase it just by watching the price action slightly. Seeing the buyers already there, the buyers that were already present came back in. That makes it a little bit better trade. We didn't have to increase it very much, just went up 5%. But that changed the EV and improved it so much in our favor. Understanding when you have positive EV puts you in a better position to just hold the trade. Because it should do exactly this. It should do what it's supposed to do each time. We hold it up there, it gets close to target, and we're rewarded for taking the risk that was the appropriate amount of risk in the appropriate way by using the appropriate entry rules, the appropriate stop, and we just let the trade do what it's supposed to do when it has positive EV. And so we take our exit as we had planned to do. Before we jump into the next example, I want to take a second to talk about trades that we really should never take. Using the EV tool, you can actually calculate and figure out how many of the trades that you've taken on a regular basis, and this was eye-opening for me, how many trades you take on a regular basis that you have no business taking. So let's say I have a 55% probability at 3-to-1. Decent, right? It's a C trade. Let's say I have a 50% probability at 4 to 1. This is a B trade. Let's say I have a 50% probability at 3 to 1. It's a C trade. Let's say I have a 50% probability at 2 to 1. This trade is not worth taking. Let's say I have a 60% probability at 2 to 1. This trade is not worth taking. How many times you walk into a 60% probability, you think it's 60% probability, 2 to 1? I mean, on a baseline, that seems okay, right? But the reality is that trade is just not worth taking based on the EV. You really have to understand the variables that allow that trade to be better than a 60-40 at 2 to 1 to make sure that you're trading with appropriate EV. This does have positive expectancy, but based on our understanding of where most of our traders make money, where most of our traders' profitable trades actually occur on this EV calculator, we can step away from that trade and say, you know what, that trade really isn't for me. So looking back at this, when you know your EV is solid, when it's favorable, doesn't it make it just easier to accept the risk and hold on to that winner? Now, let's look at a different trade and a situation many traders find themselves on a daily basis. Spoiler alert, we already kind of covered this on the EV calculator, but we're coming right back to it. This is like a mini hitchhiker trade. It's really too short of a consolidation, but let's take this anywhere. Let's talk about, do we take this trade anyway? It seems like it has some decent checks in our favor. It's above the little consolidation from the pre-market. There are a lot of things that we could argue it make this a decent trade, but we need to go into the EV calculator and actually figure out, is this a trade that's worth taking? So for this trade, our stop would be 16.4 and our entry would be 16.92 above the high of that consolidation. We'd be targeting 2 moves, basically 2 measured moves, so almost 1 point higher. You know, this is a mini consolidation. It doesn't really meet our requirements, but it's kind of close. So let's say maybe 55% probability at 2 to 1. It really wasn't set up the right way for us. And we kind of knew that, but we were thinking about it. So let's say 55% probability. It's a little bit below our baseline. 2 to 1 risk to reward, right? Let's calculate our expected value and see where we fall. Oh boy. Our expected value is 0.65. Now, it's telling us this is not a trade worth taking. This was not set up the right way for us. This trade looked like maybe it's a decent trade based on the chart pattern, but at the end of the day, based on our rules, our stop, our entry, this is not a trade that's worth taking according to the EV calculator. Now, you can get away with doing this a lot and you'll see traders kind of try stuff, but like you really want to ground yourself in the knowledge and understanding that, okay, 55% probability, 2 to 1, I don't really want to get myself caught in that situation. So it looks like, oh, maybe we're going to get this break. Maybe it's going to have a really nice move. That's fine. And a lot of times this is where that FOMO starts to creep in. And you're like, oh, I really should have bought it. I really should have done this. Again, our EV in this trade, we have to ground ourselves in the EV. This trade was not worth taking. It doesn't matter what the results are. We can start to think, okay, if this starts to hold up, then maybe I can look for another trade, right? Maybe I can look for a different EV trade, maybe a NEMA, a 9 EMA continuation trade. Maybe I can look for a pull in towards VWAP. Maybe I can look for all sorts of other things. But the reality is that trade was not worth taking for us. If we would have taken this trade, it probably would have made it very difficult for us to think, oh, maybe this is, all this stuff could have added a lot of strife to us. But the reality is this trade did not work, and it wasn't a trade that was worth trading anyway. But we got this pull-in. Okay, so now we can use our EV calculator to think about a different trade. One of the other trades that we love is a VWAP continuation trade. A VWAP continuation trade is very simple. When a strong stock pulls back to VWAP, consolidates either just above or just below it, and then breaks cleanly back above VWAP. We put our stop below the low of the consolidation. Our entry is on that break back above VWAP, that clean clear, concise break back above VWAP. We haven't really seen it yet, so we're waiting for it. But we know where our stop would be, right? Our risk would be down to 1662, something in there. Our entry would be probably about right around here, 1712, 1711, something like that. Let's say we're risking about 50 cents. And you need to see the candle close. We saw that wick, but you need to see the candle close. We can see how that move down, that failure, didn't take out the lows. We know our stop is in the right place. Now that first move up is really giving us a very clear entry. If this candle closes up here, we can enter this trade. So we're risking about 50 cents. What do we do for our target? Well, a simple thing for our target would be take the measured move of that first move. It's a VWAP continuation trade. So look at what it did in the first move. It made about a $2 move. So we'd add about $2 to here. So we're thinking right away, we're making about 2 and risking about 50 cents. So that's a 4 to 1. We can take our baseline probability of 60-40 and let's check out what the EV calculator says. 60-40 at 4 to 1. Well, that hits us right in that happy zone. Before, when we were thinking about that trade, it wasn't really high enough EV. But now we're looking at this trade and it's right into that happy zone. So this is a much better trade for us to be taking. Is that going to make it easier for us to hold to our measured move target? Well, psychologically, we should be able to accept that risk much better. So once we get this close, once that candle closes, now we're in the trade long. We know exactly where our stop is, and we allowed our stop to set up for us. That's a key part of all of this. To hold your winners longer, you allow your stop to set up for you. And then you just let the trade play out. You have your measured move target for a VWAP continuation trade. You can allow the price action to work for you. And you can let the trade just kind of fall into your lap. So now we're in a decently good EV trade. It's a solid B trade, where before it was kind of like an iffy trade. You can see how when you're trading with your EV the right way, you're actually putting yourself in a much better position. What's interesting about this trade is that this hitchhiker kind of actually set up again with that consolidation. We could take another trade here. We're not going to, but we could. You could take another hitchhiker off of this break here with your stop below the lows, and you target that 2 measured moves. 1 measured move would be the height of that, and 2 measured moves would be at that 60-40. I'm guessing we'd be right around that, that lower EV trade. Oh, we're also getting a second chance now. So all of a sudden, this move back down into support that reclaims and holds, that has expanded the EV in our trade even more. So now that baseline 60-40 has expanded even further to a much higher EV trade. We're still in that same trade, right? But as the trade has progressed, it's giving us more and more and more reasons to hold as the EV is expanding in the trade. We can allow the trade to just work for us, take our exit, and move on. When you're taking trades with positive EV, and we'll cover this process that our traders use on the desk in just a minute, how they figure out what the probabilities are, how they start to understand this, how they use this in their trading all the time. But let's get to one other example first. We're going to look at another example of a hitchhiker, this time a short example of a hitchhiker, a short trade. Why we wanted to cover this example is because this is a situation where if we have a baseline probability of 60-40, this is a situation where we can see the price action giving us a higher probability of this trade working out. We can see the multiple tests up into resistance. So that gives us a better check in our favor of this trade working out. So our entry would be the break, our stop would be right up here, above the highs of that consolidation, right? That's where our natural stop would be. We can talk about this as a 60-40. We would talk about it as a 2 to 1. We've done the math on that before. We would risk 1. We would look for 2 measured moves, the width of the range. Our entry would be here. Very straightforward trading, right? However, as we go through this example, we want to highlight how we can use this tool, and our traders on the desk are using this tool to expand the EV in their trades so much simply by letting the price action work for them. So we notice there's this little spike up and failure. Do I need to give it all the way up to the top where I'm 2-to-1, 60-40? No, I don't, because now all of a sudden I have this really distinct area where the sellers stepped in. So instead of risking all the way up here, I can use the price action, and now my stop can be placed right here. I still haven't entered the trade, but let's look at what that does to the EV equation for this trade. Now, looking at this trade, instead of taking it at 60-40 at 2-to-1, which gives us our expected value of 0.8, which really isn't worth taking for us, we can look at this at a 60-40 at 4-to-1 because we've been able to drop our stop down. Our stop is now trading off of the price action, which expands our EV so much. It takes it from one trade to a totally different trade. Now I'll challenge you with one more thing, and this is where our traders really start to excel. Because of the types of failures, and because we saw that seller even before we got the entry, this is now a 70-30 probability. Look how quickly the expected value of that trade expanded in our favor. We went from a 60-40 at 2-to-1 to a 60-40 at 4-to-1, and then we recognized that the probability of this trade, of that bigger player being there and driving that selling pressure, increased even more. So that expanded the probability of this trade. We all of a sudden went from a trade to a, this is a really good trade. Now I can really look for this. Astute traders on our desk will be increasing their bet sizing to correspond to their increasing EV. That's a totally different video. I'm sure we'll do one on that at some point, but that's exactly what we want to look for. We haven't even entered the trade yet. Again, we have not entered the trade. We've just calculated and changed our probability and our risk reward by identifying these sellers that are present. And you can see we spiked up and we sold again. That increases the EV even more. So now we've got the final entry for our trade. Now we can let the trade play out for us. Again, our stop is staying right there, but the probability expanded. So the EV expanded. Our risk to reward expanded. So the EV in this trade expanded. By using this calculator, we've been able to identify this is a much better trade than it was even like 10 minutes before. All of a sudden, does that take so much of the pressure off of you, knowing that you're trading with EV that's expanding in your favor? You have the same target. You know exactly what you're looking for. But all of a sudden, it just doesn't make sense to do anything but hold it to your target. Your EV has expanded so much in this trade simply by using the price action, simply by looking at this exact same trade and changing your risk to reward a little bit. All of a sudden, it makes it so much easier for us to just hold to our target. I understand that this pullback may be scary. What if this is the low? And it's like, well, my EV is so good in this trade, it actually hurts me to exit before my target. Unless there's something obvious that shifts the EV against me in this trade, I might as well just hold this to target and see what happens. We get that first move down, that consolidation, and the sellers are still stepping in. That's exactly what we expect to see in this trade. Now we're looking for that second move down, and when we get that second move down, we can just take our target. There's nothing in this trade that has lowered the EV of this trade at all. The only thing that happened is the EV expanded before our entry. We got our entry, and then you can take your profits. The other thing that's great about this is you can actually see the selling pressure sustaining through this entire move. So when you take the pressure off of yourself, and should I be taking profits? Should I be doing this? Should I be doing... You're just watching the price action, and you're letting the trade hit you between the eyes. Is what I expect to be occurring actually occurring? Or is something changed in the EV equation that I really have to account for? The reality is nothing's changed in this. The sellers that I expected to be there are there. The price action's doing what it should do. I can just trade to my target. All right, I know this is a complex video, but the math works. It's helped so many traders understand their edge and even more find ways to enhance the edges offered by the market every day. Remember, the market's an opportunity generating machine. Our job, what we need to do is just understand how to take advantage of the opportunities presented and unlock that ability inside of ourselves to enjoy the opportunity to trade in that happy zone. What we covered here today is an immensely valuable place to start. And by starting here and winning right where we are, we're going to build some real skill, and that's going to let us progress to the next level in our trading. We'll be able to talk about a lot of other things later, but let's win right where we are today. Let's use this EV tool. Since this EV tool helps us understand these trades better and how to improve our trading results by making these little adjustments here and there, we're going to create a challenge for you. All right, our challenge is use this tool. Practice with this tool in review. So get 20 reps with this tool this week and maybe next week. Review real trades that you've taken or that you were looking to take. Trades exactly like the ones we covered with real trading edge. Take those 20 reps, put them through the EV calculator. Figure out what your probability was. See how you could have adjusted your risk to reward. See where your EV fell on those trades. Think about, was this an A trade? Was this a B trade? Was this a C trade? Did this say, don't trade this at all? By now, you've seen how that expected value tool can really transform your trading by helping you define risk, entry, and targets more precisely based on the edge that you have. Do you want to take this a step further? You can join my free webinar where I'll teach you even more trading strategies and show you how to enhance your edge daily. Plus, you'll actually get 5 cheat sheets filled with trades that our teams use every single day. Trades like the ones we covered here. Now, remember, the market is a machine that generates trading opportunity. It's up to you to seize it, and with the right tools and the right strategies, something like this free EV tool we presented today, you can seize those opportunities and you can trade in that happy zone. Check out the link to join the webinar or watch one of my latest videos for more powerful insights.